Good morning, trading world. It is February 2nd, 2023, just after 8 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. What follow-through looks like. There will be follow-through on this rally. That doesn't mean pullbacks aren't going to happen. It means they may be really hard to take advantage of because of suddenness, choppiness, and just times in which they play out. I have often compared the market to a marathon runner. It can't run forever. It has to stop for a water break and catch its breath. These are consolidation moments in a market. I am looking for a consolidation pullback phase today, but the bulk of the move may happen overnight or pre-market. I expect the market to push up into the next main channel, which is 416 to 425 soon. I expect us to kill some time in this new range, exhausting momentum trying to break above the 416 through 425 unsuccessfully with some deep rejections. It may take the entire month to kill this momentum to the upside, which could span the entire month with a deeper rejection happening toward the middle of the month, followed by a super irrational rally back up to test what may become the high of the year. Let's get into the key levels for today. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at 414 to the 415 area. Our queen resistance is going to be 416 to the 418 area, which is very important today. This is the upper edge of the main channel that we're currently in at that 416 area. And then we have our king resistance 419 to the 420 area. I don't really see us pushing that far until tomorrow. Well, basically Friday, a primary expiration day. But we could get a little further push up to this main channel and find some rejection, and the bulk of that rejection may take place overnight, where we wake up, gap down, and then start with an immediate push back up, fighting towards that 419, 420 area. On the support side, we have our jack support at 412 to the 411 area. Queen support 410 to the 407 area, which is also going to be very important today. And then our king support 406, 401, which is where I suspect the pullback will retrace to at some point overnight, pre-market going into Friday. But it won't be easy to take advantage of that, because just like earlier in the week, I had a target of 498, which is where I was going to flip a lot of positions to get long at. That 498 happened pre-market, but by the time we opened, we were nowhere near that target area. So the same could happen with this pullback. The main thesis for today is bearish. closing below the 410.80 with a projected target low of between 410 and 405. The alternate thesis is bullish, closing above the 410.80 with a projected target high of between 411 and 420. The main channel we're in is 397 all the way up to 416, which we are very close to. And then the main channel above that goes from 416 up to 425. Yesterday, market strength and breadth opened gap down and stayed range bound until the FOMC announcement, where it exploded higher on the day. I expect some follow through or follow up, followed by some choppiness as intraday time frames try to build energy to continue up on the weekly and monthly time frame authority. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish. It's rare that I say this, but even with the tech and quant side agreeing, with larger time frames trying to go higher, I just can't see putting a lot of faith. And when I say faith, I measure my faith in these outlooks by the number of contracts that I do. So if I'm really believing in the outlook, I'm going to take, for me, and depending on which account, it may be between 3 to 6 contracts or positions. But when I don't have faith and I'm irrational, I may take it back down to just 1 or 2 contracts or positions. So when I say I don't have faith because of how irrational the market is right now, and actually, let me not say irrational, because we've somewhat resolved the order flow imbalance that we had over the last couple of days. Now, waking up, I expect to create another order flow imbalance. But that one will be to the downside, which we may correct overnight if we have the pullback that I'm looking for. But the market right now is pretty much taking orders from a monthly and weekly time frame. And looking at the market intraday, it just doesn't make sense. It may seem irrational, but it actually isn't, because the higher time frames, the higher volatility. I spoke to this once before about how high volatility basically speeds up the market. It puts in play moves that may normally take days to weeks into hours and minutes. So that part I can understand, and I can kind of sit back and be okay with where my risk is, and just be okay kind of sitting on my hands, not risking a lot, because we're at the top where it's going to get really choppy, trying to push for those last few yards on a play. With that, let's get into the scenarios of the day. All right, here we are with our first scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area and find midday chop around either the Queen, most likely, or the King resistance before going back down with the same energy or force we went up with the first part of the day. Again, this is our rounded reversal day type structure. All right, our next scenario is our expanded range day structure. We can have an initial push up into resistance before chopping back down in a larger time frame consolidation. And if you've been with me, basically consolidation is where we basically run in place. We chop over a previous range that we've already been in, and pretty much go back and forth, building up energy so that we can go for the next step, whether that's a breakout up or breakout down. But the whole point of consolidation is to kind of rebuild that energy or recoil that spring so that it can let loose again. So this is our expanded range day structure. Let's move on to the last scenario. And here we are with the last scenario, the trend day up. We open gap up with a start with a push back down toward the previous close, represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance area. And usually the second part of the day starts out with a head fake, looking to continue the primary trend of the morning. And that head fake usually reverses and we get some type of fade back in toward the close. Today I expect that fade to either start kind of meager and then snowball overnight into a big push back down toward the 406, 405 area. Those are the scenarios that I will be preparing for today. Remember, it may be kind of hard to take advantage of the pullback at this moment because a big portion may be blocked off unless you're trading futures or options on futures, but then you get a pretty bad the feels get really bad when you try to do it overnight or after hours when it comes to the options on futures. So it makes it pretty hard to take advantage of. But as we always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. This came into play very seriously through a lot of messages that I got. Seen a few people that blew up accounts trying to position before the FOMC announcement. And that's why if you go back to the $1 million moments pre-market outlook, I even clarified it again yesterday about risk and understanding the amount that you can truly risk, the amount that you can afford to lose, and taking a third of that and using only that for positioning. And this would very well help keep you out of trouble or keep you from blowing that account up and leave you with money to fight another day. I even went through it a bit this week as well, but this is why I preach so much about risk, because I didn't get the exit or able to roll the positions like I wanted to, which left me carrying extra risk. So because I only use a third of what in my eyes I'm allowed to risk, it gives me room to continue to put on positions here after the fallout and after we see where everything is, so that I can continue and not really lose or not have to stop trading. And this is why knowing your risk, or having an ideal of risk and targets or risk over direction, is so important to traders. So with that being said, I hope this helps. Wishing you a positive trading day. Have a great one.